Welcome aboard, everyone, to a new session of charting across the board, the board, the board, the board. Happy Friday once again, everyone. Welcome aboard to a brief session on a Friday afternoon, 1 p.m. Eastern Time. I hope you guys are doing great, enjoying the weekend or the weekend ahead for those who have planned, unless you are a parent. Anyways, I wanted to start the stream with the price action on Bitcoin, where we are currently, based on the current information that we were looking previously for the major W formation on the 4-hour time frame. Okay, there has been turbulences in between, basically a range of consolidation range between the 1.90, the complementary ratio of this W formation, as well as the 1.618 for the golden ratio, 117 and 121. Resistance at 120 clearly defined. We printed a new low, also within the range for the common areas of retracement at 114, nearly to the 50% retracement. However, we tested 114 and 600. There are levels that the bulls must recapture, which is these levels right here, the previous support at 116,400. This is a level that the bulls must recapture on the 4-hour. Why? Because there are other arguments for the BAM, the bad action magnet move, based on the harmonic framework. For those of you who can compute the XABCD tool, we can potentially speculate that if further decline is to be expected, we then have this B point already presented here, and why not the correction towards the pending PRZ, the potential reversal zone of a pending, once again, pending information for a bullish structure. We previously mentioned that the levels to hold as support also are within the key technical level at the at the 0.618, 111. There's a huge range between 112, 111, all the way to 109. Why 109? 109 once again comes at the levels of previous structure, resistance potentially being a new support level. Okay, basic market structure. We pierced through previous highs. Now the argument for the bulls will be to retest those levels as a confirmation of a retest before another upward advance. Okay. However, there is plenty of work to be done for the bulls. Okay, we do know that the trend remains upwards as of now, but there are arguments. I would like to focus on this stream today on the weekly. We previously discussed that on the 3-day chart, we have a divergence, class A, negative divergence, implying that a trend may reverse soon. And that has been the case, at least for now, after printing a new all-time high in the 120, upper 20, 123,200, okay? However, on the 3-day chart, this is the main argument we're looking earlier, okay? In this segment of the move, we have higher highs in the price action and lower highs in the momentum indicator for the RSI, or equal high was the argument, I believe. Yeah, equal highs. Class B start off, okay? Class B, one of the not so strong, but between the A and C, okay? So also should be carefully addressed and considered. This type of variables are suggesting or implying that a trend may reverse soon. It has been so far, but again, we do know that the argument for the bulls are still there, considering that we're printing new all-time highs. And of course, are we going to print a new lower high? I do not know, my friends, but clearly we can observe a channel here that is being constructed from the previous August lows. 49, we printed a higher low Okay, if we compute the channel, we have clearly an ascending trend as of now, an upward trend. Clearly, there are levels of support. The medium line for this argument will be within the 110, 19, okay? But again, we do know that the demand zone for the channel are also within the lower trend line of this parallel channel, suggesting an uptrending market as of now, okay? Now, the other argument, as this is an strain based on the weekly structure, let's move into a weekly, is the following, okay? Understanding, of course, that the trend remains upwards. However, we like to approach the markets objectively, as we repeat over and over. And I'm going to remind why, okay? Here, in a similar context as the 3-day chart, the 3-day chart is a time frame between the daily and the weekly, a midpoint between the two where we can gauge new variables in the price action. On the weekly, we can observe clearly higher highs in the price action, also divergence here. Might be an early argument, but let's pay attention to these levels. Lower highs in the momentum indicator here for the weekly time frame, also in confluence with the 3-day chart. Why am I bringing this context here, or these divergences? Because the sentiment is that never changes, okay? Only to portray previous levels of the sentiment in the crypto space, we previously encountered a higher high also here in this segment of the move. In a similar manner, also the lower highs printed in the momentum indicator for the RSI, where also the same arguments for a negative divergence on the weekly indeed manifested in a major decline of nearly 32% from those highs to the lows. What I see in the space is something that never changes. For example, I noticed recently that, as you guys know, even a broken clock can be right twice a day. But again, the timing to when making such projections is very key to understanding those key turning points in the price action, or in the market action. Okay, here you guys already know the story. At the same highs, if we move into the daily time frame, this is a significant decline. On the weekly, it may only appear to be a blip, okay? But again, these levels back then was a significant turning point towards the lows. I wanted to bring here briefly a statement posted in our room back at those levels. I'm not suggesting or implying that this is the same argument. As we know, markets are irrational, and we, of course, gauge new information as they present in the chart. Looking at this statement back in February, the argument was everything continues to be on track so far. The immediate levels, I will be paying close attention, as detailed and explained before, are based on significant confluence areas as illustrated in this chart below. That information that we previously presented here, okay, the one that you guys can observe on the screen, was previously an M formation, okay? Previously a pending M formation, and the sentiment when presenting these variables on a major time frame completely disregards. Those who want to observe different arguments only focus on the upside or towards the downside. What we do here is try to present arguments based on the technicals, nothing else, okay? So to bring that idea, that context, giving the previous higher highs in the price action, and lower highs in the RSI, the argument to that idea, the pending formation, was also within the context of the Wyckoff distribution. If you guys recall, okay, our arguments back then, 105, 109, was to potentially a distribution schematic was going to occur in confluence with an M formation. This one, the one that I posted in the recently into the stream. Okay, this one of course is a chart from January of this year, prior to that major decline. And the reason why I'm bringing these levels once again here is because at these same highs, okay, something that I noticed also among participants is pretending to know what's going to happen next based on sentiment. It doesn't necessarily work in that manner. Why? Because in the space, we noted among the crypto space, Twitter, among other platforms, that they saw all-time high goals for 130 or higher levels at 250 was also presented then at those highs. And in a similar manner now, what I observe is that the same arguments are being presented. Of course, we have the major decline, correct? We previously presented this information at the beginning of the year, and then of course that manifested towards those levels, okay? I did mention that my mistake was to not believe that this upward traction will continue to current highs, but I was adjusting accordingly. We had the levels in the mid 90s, okay? Since then, everything pretty much changed afterwards. Therefore, we presented other arguments for the bull flag at the retest of the lower trend line at 98. There was a butterfly. Since then, we knew that this upper trend line at 107 was a key level to bridge, and now clearly an upward traction for, once again, what is known as this W formation on the 4-hour time frame. This is a chart on the weekly or an stream based on the weekly, but I would like to bring all the key information based on this weekly time interval, okay? We're looking now at the 4-hour, where the peak was indeed presented at these levels. Now a correction. The argument here will be if true support levels are found at either common areas of retracement from the lows of the 107 run to 123, the 0.382, 116 once again was previously support. We pierced through, now key levels to recapture for the bulls, okay? All the way to the 0.618 basically as a key technical level. We didn't breach necessarily the 50% at 114 200, but we hover those levels pretty close at 114 600, okay? Now on the hourly time frame, there is an M formation, a bullish structure here for the bulls that they may have the argument to push prices higher. Also, if we move now into the 30-minute time frame, there might be an argument for another W formation, okay? Of course, this is very key for the bulls to recapture, at least on the daily session close. And confirmation also, after recapturing this, there should be a retest of those levels to confirm that true support levels are being recaptured. Maybe an early identification structure here if prices manage to go higher. If not, of course, this will be out of the cards and we will focus on the 4-hour, okay? And also the daily time frame. On the daily time frame, the previously noted chart here was also the hard line or the medium line for this pitchfork channel, okay? Also, I would like to pay close attention if we go to navigate those levels as support. Of course, there's also a major trend line here based on this major channel once again for the major channel on the weekly time frame, okay? We do know that support levels are defined at the lower trend line, the demand zone, as well as the resistance zone for the upper boundaries of this trading or this uptrending channel, okay? 130 will be pretty much the ideal scenario. If we find support at 109, 110, then we have the measure move already mentioned many times for the ideal support levels based on the weekly time frame. The daily I will be recalling if that is the case. Yeah, that will be the ideal scenario for a true support levels before another upward traction. Reason why I like to approach the markets objectively without pretending to know what's going to happen next. Because the truth is, nobody knows what is going to occur next. We do our best guesses, we present our arguments, and therefore, if you have a setup, you act upon it, where lower risk and potential higher reward opportunities may be found. That is all trading, my friends. Identifying lower risk areas, where to buy or where to sell, because the risk will always be there. And the idea is to not lose as much as we would like to preserve the capital growth. Okay, everyone, this is basically what I do see in the price action for Bitcoin. Nothing changed since the completion point of this W formation on the 4 hour. Okay, key support levels once again remains at the 50%, 114, 100, and the 0.618. Again, the bulls must recapture the 116, 400 in order to avoid further decline and potentially the BAM, the bad action magnet move, ideally implying that once the B point is pierced, then the argument strengthened for the completion point of this pending information. That should be around 109, 106 or so. Okay, from there on, of course, if that's the case, we'll reassess. We'll gauge new information in order to present new support levels. Okay, as of now, bulls once again are in trouble on the minor time frames. Okay, on the minor time frames. On the major time frames, are still in control. Okay, bears are having their moment now, but the bulls, to recapture this upward advance, must close above 116, 400. Okay, everyone, thank you for being here. I believe I highlighted all the levels I wanted to mention. Also, before finishing, we are also expecting the next intersection between price and time expected for July the 28th. Reason why I was focusing on the high here is based on this cyclical rhythm. Okay, you guys know, or those who are not familiar with cycle moves, the cycles are normally anchored from trough to trough. Okay, from trough to trough, this is the same sequence, the same cyclical rhythm. We find the lows, previously the highs, range, the lows, upward traction, the highs, back to the lows, the highs, back to the lows, a range, previous highs, and now are we going to print a cycle low, at least with a short-term trend within the 0.618 expected for Monday the 28th. We'll see, my friends. Following after, we then have August the 5th. And lastly, the golden ratio for the time frame expected for August 19th. Okay, this is reason why forcing an upward move when the cycle is indicating that we have reached the cycle high, at least in the short-term trend, then it is pretty much impossible to force a trade. Therefore, the next cycle low may come between July 28th and the 29th. At least maybe a breather. We'll see. We'd like to again emphasize new information as they develop. Everyone, thank you for being here. This is Marble6. If you like our content, of course, please visit us at marble6.com. We have pretty much the started button, and if you're interested, you click into joining our Discord, or if you like the free content, you can subscribe and support our YouTube channel. Also, we have partnered with Apex. They're having a 90% discount on all evaluations. If you believe you have the skills to trade at a pro firm level, then this might be an opportunity to test your strategy. Okay, 90% off the first month, the following after 80% off, and then you can get funded and get paid. Evaluation proves that your strategy actually works. You are able to receive 100% of the first $25,000 that you make on your account. And beyond that level, there is the profit split target. 90% is for you. You keep the 90% of your profit and divide between 10% of those 100% with the company, of course. This is a way I started to respect day traders after testing myself, starting with Topstep, passing the program. And I understand that everyone has their own strategy, being day trading or swing trading. The fun part of day trading can be apply at a lower risk area without blowing your personal account. So therefore, if you have no experience in the trading space, I would personally, if I was trading for the first time, I would likely, if I would have known back then without blowing much amount in dollars, I would likely use the prop firms. And of course, once you are more advanced, you prove that your strategy worked and you get paid. Okay, basically as trading your own account. Anyways, everyone, thank you for being here. I'm going to end the stream and I'll see you guys on the next one. Once again, keep this major uptrending channel in mind. Okay, there are support levels at the medium line 108, but again, would like to monitor new developments. Everyone, thank you for being here. Enjoy the weekend, and I'll see you guys on the next one. And remember to live a life with an attitude, gratitude. Cheers.